Okay, we should be live. Hello, everybody. Welcome to this week's Business Broadcast. I'm Nicky Larkin, founder and director of Guy Accountants, and I have my wonderful tax director with me, Guy Smith. Hi, Guy.
Good afternoon. Been a busy morning this morning.
Oh, it is. Yeah, we've been a bit.
Rushed.
We're going to be presenting a very professional front, but we have been frantically running around this morning. That's good. Well, it's just busy. It's busy time of year, but that's all good. And what we're going to be talking about today is PAYE and CJRS tax investigations. So CJRS, essentially furloughs. What's been happening, so PAYE inspections, they don't come round particularly very often for SMEs. What we've been running, 14 years? I think I've seen 2 in 14 years. Fingers crossed, touch wood for our clients. So that's really good. But we are expecting to see, hopefully not for our clients, but we are expecting to see some CJRS investigations, partly because the whole thing was put together very, very quick by the government. They kept changing the rules. So there are inevitably lots of, not from ours, obviously, but there will be people that will have made mistakes or where Hmrc want to question. So what we know that Hmrc have been doing is they've already been sending nudge letters to very large organisations that have claimed CJRS, and we are expecting in the early 2022 that some SMEs will start getting these nudge letters. So what we want to do today is to prepare you if you get one of these letters, so that you're not panicked and what would happen. So starting off just with PAYE in general inspections, Guy, how would a client know, how would a business know that they are going to have an inspection? What would normally be the first step?
It will be the same with all other types of inquiries. There will be a formal letter that will come through from Hmrc saying they want to do, well, before COVID, they would want to do a pay-as-you-earn visit. But these days, they're more likely to ask for records, a sample set of records to be supplied so they could do to start their check. But as you say, they don't tend to crop up that much these days in isolation. What you tend to find is they might crop up as part of a cross-tax investigation where Hmrc have a tax issue, a VAT issue, and perhaps a pay-as-you-earn issue. And you might find, if you're a business owner, that you might find that 3 inspectors want to come and see you and talk about different things. And that's when you really need to be prepared, when you've got 3 of them sitting in front of you asking about your business records. Because one answer to one might cause another problem with the other one or the other one. When I've done them before and we've had 3 inspectors in the room, you have to be really, really careful about the answers that you give and the way you approach them.
Okay, so in general, what we would expect for most SMEs is, fingers crossed, you're a good business that have been filing things, paying your taxes, and you probably the first notice will be receive a letter. So what should happen when you receive that letter? What should you do? What should their first step be?
The first step is don't ignore it. So that's the first thing. You've got to respond to it. So I mean, most clients would usually, the first thing they'll do is they'll bring up their account and say, "What do I do about this? How are we going to approach it?" As we found out yesterday, one of the first things you do, you look for fee protection cover. If you're a client who has got fee protection insurance, then you want to make a claim if it's covered. That'd be your first port of call.
Yesterday one was one on a import VAT type question, wasn't it? Not a PAYE. But it's still exactly the same method.
Yeah, it's exactly the same principle with any sort of inquiry. you will receive a letter. You don't ignore it. You then see if you've got fee protection insurance to cover the nature of the inquiry. So that's always your second step.
Which, of course, with all of our clients, we do blanket insurance for all clients. So, if you are a client of ours, you are covered, well, provided it's within one of the things that are covered.
Yeah, because there's lots of practices that don't cover by practice. It's up to the clients to volunteer, not volunteer, to agree to pay for the fee.
They sell it as an additional service.
Yeah,
very ramped up fee.
Yeah, whereas we provide it as part of the service that we deliver. So that's always. So the first point is don't ignore that. The second letter is always check fee protection insurance, because if you get part way through the inquiry and you've tried to deal with it yourself, you think, oh, I can just deal with this really quickly with HMRC. I'll just ring them and I'll tell them this, which is the worst thing to do, because I can understand why people try and do it, because they're trying to be helpful with HMRC and think, well, if I really help them, they'll just go away a lot faster. But the danger is that you start saying things as a taxpayer, you start saying things to HMRC that aren't quite right, or HMRC misinterpret, or there's something that goes wrong. And then if you try and make a claim later on, there's a danger with the fee protection claim later on if you've already started doing things, spending time trying to deal with it yourself with HMRC. So the best thing to do is don't ignore it. Check if you've got fee protection insurance, then speak to your accountant and get a strategy together about how you're going to respond to HMRC. So invariably what that will mean is having a look at the information HMRC want to see. And of course, we would, the ideal thing is that we would review it with the client to begin with to see if there's anything there that is a problem. Because the best way to deal with inquiries, if you spot the problem first and you tell HMRC first, that helps you with a penalty if any additional tax is found to be due at a later stage. So it's always better if you can identify an error, if there is one, first, notify HMRC first, because that helps you with the penalty.
Absolutely.
With investigations, sorry, Nick, just with investigations generally, you need to have a proper strategy to deal with them. You can't just go off at a tangent and think, oh, I'll do this, I'll do that. You've got to think about the steps involved, because initially, with all types of inquiries, the first stage for HMRC is information gathering. They don't want to jump in and say, you've done this wrong, you've done that wrong, you've done this wrong. They information gather to begin with, regardless of the type of inquiry it is. And so they'll ask for the books and records to support whatever the issue is.
And in that, when they're asking for that information, Guy, are they entitled to see absolutely everything? Is there a limit to what they're entitled to see? Are they only allowed to go back a certain amount of years? What should if they come in and ask for a certain thing, is it just, of course you say yes, or is it with business records, is there anything that they aren't entitled to see?
Well, the first thing you do is make sure that the letter has been issued within the time limits that HMRC have got for opening inquiry. Because if they're outside the time limit, and this happens time and again, where HMRC will issue an inquiry letter right on the deadline of when the inquiry window is about to expire. So it may well be that if they issue it late and you receive the inquiry notice late, there might be grounds for you to say, well, the inquiry notice is invalid.
That is a really good point. So before do anything, that's why you need to talk to your accountant or somebody like Guy, because they will know whether it is actually still a valid inquiry or not.
I had an inquiry not long ago where HMRC had issued the letter right before the inquiry window had finished. They didn't withdraw it until we were going to tribunal. So they kept on and on arguing for it, but when push came to shove, they withdrew it. So if the inquiry notice is valid, the next thing to do is to look at the period, because of course with pay as you earn, you're normally looking at a tax year, not the accounting year. So the client may be having to pull records from two sets of accounts because they're looking at a tax year. So then you've got to look at the period and then think, right, what are HMRC looking for? Is this, as you say, is this a valid request? Now, HMRC are notorious for pushing the boat out on what they ask for just to see what they get in, even though some of the things they ask for are bordering on, well, they're just not allowed to ask for them early on. I mean, the most common thing that HMRC will do with some inquiries, they'll ask for the private bank statements to look at perhaps the directors or the sole traders or the partner's means position or look for something there. So it has to be, the questions and the information that are asked for have to meet have to fit the period that's under inquiry, and they have to be specific to whatever the risk is. Now, with HMRC these days, the inspectors are supposed to be open and on. They're supposed to participate in open dialogue. So if somebody gets a letter through and they really can't see what it is that HMRC have got a problem with, what, you know, they're asking for tons of information. There's 20, 30 things, piece of document. What is the problem? And there's no harm in ringing the inspector to begin and say, look, you're asking for a lot of information here. Don't say cut to the chase, but you know, you really want to try and engage with the inspector. Say, what are the risks here that you need us to have a look at, and to address in our response to you. And that's usually a good tactic as well, to try and just it's almost like break the barriers down a bit, really, and just have an honest conversation with the inspectors. The newer ones, the ones that have been trained recently, are quite good at talking to people. If you ring them up and ask them for, you know, what's going on. The older ones that have been there for quite a while, a bit more entrenched. They prefer the cat and mouse. You know, they won't tell you, and you end up playing cat and mouse games all the way through. But it doesn't hurt to speak to the inspector early on.
Okay, absolutely.
That was a really long-winded answer. I'm sorry.
No, but absolutely. So in summary, summary for what we've got from so far today, you'll get in general, you'll get a letter. You need to carefully read that letter. So get somebody involved that is used to these types of investigations, so know what they're looking at the letter to say. Are they within time? What actual period are they looking at? You then need to make sure that you make that initial contact and make sure that HMRC, that you're being cooperative. You make sure that you provide the relevant information, but make sure it is that relevant information that they're entitled to and not go too far. So one thing that we've been prepping with some other clients is to make them audit ready, really. And this will make them feel much more confident in case they ever have inspections. So whether it's what we've been doing is we go out to a client and do a mini VAT. If they're not an audit threshold client, so they're not already having an audit, so there are a client, you know, might be under 10 million revenue. So we do an internal VAT audit or an internal PAYE inspection. Now, why is that good for the client to do? What comfort will give them, and what stress relief will it give them by doing some proactive stuff before it ever gets to the position that you've got HMRC asking questions?
I mean, what you're really talking about here is they're almost like tax health checks. You know, you want to make sure that
that's a good way to put it. Health check.
Yeah.
Don't like the word audit. That's scratched. It's a health check.
Yeah, it's like a tax health check. The main reason for doing them is because if some businesses don't realise they're doing something wrong, it can go on for ages and ages and ages. And you have to remember with HMRC, when they launch an inquiry or a compliance check, they're always doing it historically. So they're always working on periods that have already passed. So by the time HMRC finds something's wrong, it could be 18 months, 2 years since the error started. And of course, you can't undo it then. The error has been going on for so long. So if it's a new business or a business that started doing something differently, the sooner they can get advice and stop making any mistakes early on, it saves you from HMRC coming along and looking at historical data later on and saying, right, you've been doing it wrong for 2 years, you're going to get a penalty, you're going to get, and all the rest of it. So it's better, particularly if you're not, I'd say particularly if you don't have somebody within the firm that's financially minded. So if you're, I'm just thinking if you're trying to think of a suit, like if you, I don't want to say window cleaner, but if your mind isn't set to figures, and figures are the bane of your life, and you don't like doing them, you're the sort of person that really needs to know what they're doing from the word go, because you could easily get caught up by HMRC later. Because you're or even entrepreneurs that are so focused on their business, paperwork comes second.
Yeah, clients come first.
Yeah, it's clients come first. Yeah, keeping clients happy, get money, getting money into the bank account. They're the priorities, and the paperwork comes second. And of course, HMRC don't like that at all.
Absolutely. So just a reminder to everybody watching today, whilst you're eating your sandwiches and drinking a cup of tea. Don't forget, Guy and myself are happy to answer any questions. So don't be shy. If you want us to be not say your name, that's fine. But so with no question is a silly question, I always say, is I'd rather hear the question. So whether it's something specifically about PAYE or about investigation process or about health checks, do just pop the question in the box, and we will of course answer it. So right, we've talked about health checks so that we can be the business owners can sleep at night and not have to worry if there is a thing. We've talked about the letter that happens. We've said about the initial conversations with HMRC and what records we'd be sharing. Okay, what then happens if they're just to explain why it is so important to get this right, because what are the actual penalties or things that can happen, what HMRC can impose if you have completely messed up on your CJRS calculation or some PAYE calculation?
Well, the danger to begin with straight away is that the error hasn't been across, well, the error might have been across multiple years. And so you're not just, the business owner might not be worrying just about a tax bill that covers 1 year, it could be 3 or 4 years. That HMRC go back. They could even go even further back if they think it's deliberate and concealed. So if HMRC finds something wrong in one particular year, they will assume that the error has been repeated in the earlier years, unless you can prove that it hasn't been repeated. And so they'll say, well, based on what we've seen so far this year, and you've told us that you've run the business the same way over the last X number of years, we will look to go back and whatever way they decide to scale back into the other years. And of course, that gets complicated as well, how far HMRC can go back, because then you're in a conversation with HMRC about whether the mistake has been made despite reasonable care being taken, whether it's a careless mistake, whether it's a deliberate mistake, because they all have different time limits. They all have different penalty levels based on the behaviour. So there's so many things to take into account when you're dealing with inquiry. It's just you can't do it in half an hour. You just can't.
No, of course. So that's what we're just touching on the surface of this subject today, just to get people thinking about it and thinking about questions. So that's what we want to do, is by the end of this is to give you some answers, but also more importantly to raise some questions of what is happening in your own organization, so that you can be asking to your internal accountant or internal payroll people to just to make sure, start thinking, what are we prepared if there was a question about something.
Well, even on silly things. So say you've got somebody in your wages department needs the answer to a payroll question, and they think, right, I'm not going to speak to the accountant, I'll ring up HMRC. It's quicker, I'll just ring up HMRC and they'll tell me. If somebody does that, then get the name of the person that you speak to at HMRC. It's a really minor thing. But if you receive the incorrect advice of HMRC, the business owner, ring HMRC thinking, right, I will get the right advice from HMRC about what they want me to do. It's not uncommon for HMRC to give the wrong advice. So it's important to keep a record of the phone call of who you spoke to. So if you do then get the wrong advice and then you make a mistake over the following period, weeks and months and everything else, if an inquiry is then launched, you then got a case to go back to HMRC and say, well, I've taken reasonable care here. I rang HMRC. I've done exactly what, I spoke to one of your colleagues, so-and-so on such and such a date. They told me to do it this way. I've taken reasonable care. I've tried to get it right by ringing HMRC. So it's always important, because lots of people say, oh, I rang the helpline. Who do you speak to on the help? I don't know. And it gets really
sometimes it's just the basic things that that can run right, because then they say, well, when you have that inspection, they won't have that record of that phone call, which is scary, because you think they do, but they only keep them for so long. So they probably won't have that, and so you won't have access, and then it's just he said, she said type situation.
Exactly.
We've got some questions coming, which is brilliant. So I will answer them in a second, bring them forward.
It's brilliant for you, not so much for me.
Well, I'll pitch in.
I've got to answer them.
We're a team, Guy. We're a team.
Okay.
It's no problem. So, but a couple other things to be thinking about when you're having a PAYE inspection. It's not just about the calculation of your pay slips. It's things surrounding it. So you need to make sure that your processes are all in check as well. Because, for example, I just want to throw out there a couple of the things that I've seen where there have been inspections and things picked up is things like expenses policies. So where people have been claiming for lunches, for example, that you think, right, they've claimed for lunch, but actually there's some loads of rules. So you need to be making sure that are your expense policies, are they HMRC friendly, and making sure. So that's, again, which actually neatly comes on to a question for.
Oh, I see what you were doing there. Oh, I see what you were doing.
Yeah. So what are we looking for? So Bethan says, what is included in the health checks? So, Guy, what is included in the health checks?
Well, I think if we're gonna do a health check for a client, you need to put your head in the space of the inspector and what the inspector is going to look for.
Yeah.
So you have to, and what inspectors love, they love to see an audit trail. So if you're doing a health check, it's important to have each step clearly, to have a clear process, and to have the records to match each step of that process. That's the quickest way of answering that one.
Absolutely. And that is not just about, so remember, it's the payroll and the expenses policies, and also the determination of, is somebody an employee or not? Because that's also part of the PAYE. Yeah. So, it gets really wide. You think, oh, PAYE, that's super easy. 20% or 40%, bit of employers' national insurance and employees' national insurance. No, you've got to think about the expense policies. Are they robust enough? And also, is somebody being treated properly as an employee and putting through the payroll, or have you been just paying them as self-employed where they shouldn't be? So have you got proper records and checks for those as well?
Because we've had this a few times recently with hairdressers. Yes. Where hair salons where they've been looking out to rent out a chair and say,
oh yes, and I always try and dissuade them from that.
Yeah, I know my friend who's self-employed. They want to come and use my chair.
Oh, yeah, no, absolutely. I've had that's been a regular question. So we've got a few salon quite a sort of medium size hairdressing salon chains, and you hear that, oh, my friend who runs a salon, but she doesn't have to pay VAT because she's got them all as self-employed, so it's renting chairs, and therefore my PAYE bill is sort of nothing. And I'm like, no, yes, but they shouldn't be able to sleep at night. Whereas you can sleep at night because you're doing it properly. You're VAT registered. You got everyone through the payroll.
Well, yeah, I mean, we're quite lucky. We've got our clients well trained. They will ring up and say,
they ask us.
Yeah, they ask us.
They ask us before they go and do silly things.
Yeah, my friend wants to do this, and they want to do this. What's the tax implications of it? So
my friend down the pub.
Yeah,
absolutely. We got another lovely question. So this one is from Victoria. She asks, how do HMRC choose whether a business is to be inspected? So there's various different routes to that, isn't there, Guy?
There's lots of things. Before HMRC launch a compliance check, there's always a risk assessment before it, where HMRC will consider the risks of a case. And that can mean, it might start off HMRC a risk assessing for a tax inquiry. And it may well be that the tax it doesn't flag up as being worthy of a tax inquiry, but it flags up as being a pay-as-you-earn inquiry. And they say, well, based on what we found, we're also going to have a look at them for pay-as-you-earn. So it's all based on risk, and it's all based on the information HMRC have received. I mean, like we talked about previously, sometimes it can be anything from an informer can ring up and say, I used to work for them. They take cash in hand. They do this, they do that. They pay all their wages in cash. It can be something from that, where it's malicious, somebody with malicious intent has rung HMRC, or it can be a very specific risk assessment as identifies something very specific in the accounts that's flagged up as a problem. So you've got a whole range of everything in between that could prompt an inquiry, but it's always based on a risk assessment.
Yeah, and sometimes they look at specific sectors, isn't it? So it wasn't that long ago that there was a lot of national minimum wage check inquiries, and so lots of businesses that are often on the cusp of that were being checked. So, you know, the hairdressers, care homes, restaurants, you know, those, you know, sometimes it will go in specific sectors because they're doing an NMC check.
Yeah, because thinking back when David Cameron and George Osborne were around, HMRC at that point did loads of what they call task forces, which were invariably geographically based. And they think, right, we're going to hit all of this particular trade in, I don't know, Cornwall. We're going to hit all of scrap metal merchants in Scotland. We're going to do all this. And HMRC used to publicise what they were going to do, where they were going to do it, to encourage people to come forward, to say, oh, before you come out, I've got a disclosure to make. Because that was after the financial crash, of course, and the government were trying to gain as much money from voluntary declarations as they could. But HMRC don't publicise tax forces as much as they used to, where they used to say we're off to do this, because they've got wind to the fact that people would be ready for them when they turned up.
Indeed. So we're coming to the end. So if there's any last minute questions, otherwise it's probably just a good time to summarise the tips.
Well, should we do Corona? Shall we do CJRS quickly?
Oh, yes, let's do some bit specific things about CJRS. Yeah.
Right. So let's just explain what CJRS is, just for anybody who doesn't know what CJRS stands for. So that's Coronavirus Job Retention Scheme. So as you mentioned earlier, it's basically the furlough scheme. So it ended on the 30th of September 2021, and the last claim had to be in by the 14th of October. HMRC are prepared to accept late claims if there's a reasonable excuse for the claim not being submitted on time. So that it is still possible to make a claim. Now, what HMRC have been doing because this was the CJRS scheme was one of these where HMRC paid out and they check it later. So they thought, right, we'll pay out the claims, we'll just pay them out, and then we'll come around to checking them all later. So that's where we're at now. So HMRC have done the payouts and they're now checking them all. So back, I think taking it to the other screen, the first arrest was made last July 2020, where the first arrest was made, and that was thousands of pounds. That was something like £495,000 or £500,000, where it was, the furlough claim was overinflated, and there were money laundering issues and all that sort of thing. So HMRC last summer, they started the really high risk, the big numbers, where people have claimed a lot of money, and HMRC thought this is just completely out about what we know about the company, what we know about the director. This is all wrong. So over time, they're gradually going through the very high risk ones, and they are going to get down to the SMEs at some point as they work down the risk process. Their sheet of cases they want to look at, they will get to SMEs in the end. And this is where SMEs need to be careful, again, following the tips we mentioned earlier about if they get a letter from HMRC saying they're doing a coronavirus compliance check, it's the same advice as before. Don't ignore the letter. See if you're covered with fee protection if you've got it, and then speak to somebody who knows what they're doing.
Perfect.
That was a real short stab because I was watching the time in the left-hand corner.
Yeah, indeed. We have just one little question left.
Okay.
So we've got 1 minute left, so let's pop that in. So Tori says, so Victoria's got another question. What is the biggest penalty you've ever seen?
It isn't a pay-as-you-earn one; it's a tax one, where it was over 25,000. That was a big penalty.
Yeah. Luckily, we can say we tend ourselves not to see huge penalties, but that's because we're working with clients that are very tax compliant. Obviously, if you look in the press, you will see there are people that have had absolutely massive penalties because they aren't being compliant. They're not utilising tax professionals and accountants, and that's why they end up in a mess. So that's probably a good place to end it. Don't get in a mess. Phone Guy. Super. So thank you very much, Guy. As always, it's been a delight. Next week we are I have as my guest Peter Felix from Get My Muse. He is talking about releasing up capital into your business, so from invoice factoring and various things like that. And then the following week, I have Nick Babington from MHA, who was talking about different systems that you can implement into your business to ensure positive mental health for your team, with all the different things that and occupational health type things as well. So he will be going through lots of different things. So exciting to new guests coming on board for the next two weeks. So you've got a couple of weeks off there, Guy. Super. Okay, well, thank you very much, everyone. Have a lovely weekend, and of course, good luck to Brackley Town tomorrow.
Yes.
Good vibes, everyone. Fingers crossed, everyone, for Brackley Town tomorrow.
Top of the table class.
So thank you very much, Guy, and
thank you.
hello for me, and bye. Thank you.
Bye.